Good afternoon, ladies and gentlemen. Well, the elections are over and I needed a bit of time to process it. I couldn't record a video right away because I just couldn't understand how we could make the same mistakes all over again. On the other hand, let's still give our new Prime Minister a chance. Why? Because judging even by the comments and interviews I've listened to, he sounds pretty good. One thing I know for sure, he is definitely much smarter than our former Prime Minister, but that could also be dangerous because it's one thing to say something and another to actually do it. So let's take a closer look and see if absolutely everything he promised before the elections will actually happen as stated, or if it was just talk and we'll end up seeing different results in reality. Today, I happened to hear an interesting and noteworthy comment from one of his ministers, who officially stated quite clearly and unequivocally and in no uncertain terms that he does not want any oil pipelines from Alberta heading east. That's exactly what they promised before the elections, as they had repeatedly stated, but if this really does happen, then of course they will greatly upset this province, which is currently in the active process of separating from Canada. This is no longer just a theory, it's already a reality. Because if you even look at how Danielle Smith, personally, I believe she is one of the best politicians in our country at the moment. She absolutely does not support Alberta's separation from Canada. But if that's what people want, doing what people want is in fact the right thing to do, and that's called democracy. Let's not talk too much about Albert. The only thing I still haven't quite figured out is why our neighbor Donald Trump wanted so badly for the Liberal government to be in power. Even now, after the elections, when meeting with our Prime Minister, he officially said that thanks to him, of course, he won. There are a lot of different theories. Personally, I think one of the theories is that he would actually prefer a weak Canada, because if Canada is weak, it will be easier for him to negotiate with us or maybe even to partially take it over. I'm sure that he's not very interested in Eastern Canada like Ontario or Quebec because they have very liberal governments. He prefers Saskatchewan and Alberta more. Well, BC isn't exactly very conservative either, but on the other hand, there are a lot of conservative people there. Even judging by the elections, by the election results, we can see that the Conservative Party got quite a lot of votes there. We'll see how it all turns out. Today, I want to talk about the economic situation, the real estate situation, and the situation with interest rates. What should we expect? Why? Because I think we need to be prepared for all possible problems. If we look at the situation in Canada today, it doesn't look very good. Small and medium-sized businesses are in very poor condition. We call this surviving mode. They're not planning to hire anyone. They just want to somehow endure and wait it out because no one knows what will happen tomorrow. This is a situation that you could say hasn't happened in our country for a long time, and you could even say in the world. Because Donald Trump has his own plans, and of course, he only cares about one country, his own. All the other countries don't really interest him. You know, I've often heard people say that his policies will bring America to ruin, that there will be a recession, and so on. I've always argued with people on this topic and said that for America, Trump is a good thing, but for everyone else, that's another question. If we look at the results, what he has achieved in a short time, for America, it's actually not bad compared to us. But as for what will happen to us, I don't know. And as for the talk that there would be a recession in America because of Trump, just yesterday, JP Morgan officially acknowledged that they do not expect a recession since the economic situation in America is getting better and better. If you look at the kinds of contracts he's signing with other countries, it's simply mind-boggling. Even now, when he was in Qatar, he already signed a contract with them for $600 billion. But economically, he reached an agreement with them for about, I think, $1.2 trillion. At this point, in just 3 months, he has already brought in more than $10 trillion in investment to his country compared to us. This is really a problem for us. Because if you look at the news, we get bad news every day. As for confidence in the future, that's a very important factor for the economy. If people are not confident about tomorrow, or if businesses are not sure what to expect or what their future holds, they stop investing. At the moment, according to the very latest available data, confidence in the future in Canada is at an all-time record low. It is even lower than it was back in 2008 when there was a real and significant global crash, or even in the years 2019 and 2020, which were both heavily affected by the COVID pandemic. This clearly shows that people are genuinely, truly, and deeply afraid of what the future may hold. And if they are afraid, it means they are not buying anything, not investing, which of course cannot help but have a negative impact on our economy. I don't know if you happened to listen to our Bank of Canada governor, who gave a speech a couple of days ago, It was calculated that he said one word 49 times, which means uncertainty. Uncertainty is a very big problem. He also pointed out the risk that will arise if people start losing their jobs, they won't be able to pay their mortgages. The second dangerous situation is that many clients are renewing their mortgages, and at the time they were paying maybe 1.8%, 1.5, 1.7, and now they'll be paying around 4. Although, of course, this is already better than it was because interest rates had reached 6%. But still, this is certainly an unpleasant surprise for people. And because they will have financial problems, this could lead people to fall into debt traps. And our Canadian Central Bank is very concerned about this. One of the important factors is, of course, unemployment. In Canada, it is at 6.9%, although we expected 6.8%. What's most interesting is that the increase, or rather the new jobs, appeared only in our federal government sector. This was related to the elections. There was a lot that needed to be done there, and that's why many people started working. In reality, the people who were actually doing something there, working on machines or assembling cars, for example. Unemployment, of course, is in a bad state. We were counting on 6.8, but in reality, it's 6.9. And for those who are very concerned about the American economy, I would advise not to worry. They really will be just fine. Last month, we added only 7,400 people, as in jobs. But again, these are positions related to our government. Americans added 177,000. And of course, you could say, yes, but America is a much bigger country than ours. Yes, but not so. We have 7,400 and they have 177,000, though they expected less. Their surprises tend to be positive. Our surprises tend to be negative. Another very important factor is that when it comes to the federal government, jobs there were actually lost and the new jobs were added in all other sectors. And that's very important for the economy, so that it's not the federal government creating jobs. No, it's very important that the jobs being added are those that actually help our economy and participate in our economic process. A few words about interest rates. Of course, if our economic situation is in bad shape, the Bank of Canada will be very interested in lowering the interest rate. But because of tariffs, we'll have inflation and everything will become more expensive. And for the central bank, as I've said many times before, the most important factor is not the economic situation, not so much, not how hard it is for you to live, to buy things, to eat, to drink, and so on. No, their primary concern is inflation. And if inflation rises because of tariffs, you can expect that interest rates will rise as well. But in the near future, I think this year, if everything goes more or less normally, because there are different scenarios, there is a kind of normal scenario. If we're talking about the normal scenario, our government will eventually reach an agreement with the Americans. And yes, maybe the deal won't be all that great, but at least there will be one. At the very least, we'll know what to expect from the Americans, so we're roughly counting on a rate cut of 0.75. The floating rate might fluctuate around 3.5. On the one hand, that's not bad. Fixed rates are currently hovering around 4. But I would say that if you're getting a rate of around 4, there's nothing wrong with locking it in. But the floating rate is also becoming more attractive. However, there's a very important factor here. You can't afford to miss the moment when the floating rate starts to go up. That's why I recommend following me on social media, as I'll share updates about this. I can't guarantee when it will happen, but you'll definitely know. Or if you're our client, we'll likely inform you directly. We'll get in touch and suggest what you can do with your mortgage. But at the moment, we expect that the rate will decrease by about 0.75%. As for fixed rates, it's hard to predict anything here because it depends heavily on policy, especially from the Americans. At the moment, they are within 4%. But what will happen next, we don't know. They could go up, they could go down, and it might turn out that for a short time, the variable rate will be cheaper than the fixed rates. So I'll repeat once again, if you decide to take this risk, although I can't even really call it a risk, it might actually be the right move, just make sure you switch in time. And when will that moment come? That depends on what happens and what we expect. So keep following me. I'll keep you updated. There are currently two major risks in Canada. The first is, of course, the economic risk. If you watch the news, you know very well that we are experiencing significant layoffs, especially in Ontario, particularly in the industry related to car manufacturing. And Trump's goal, of course, is to move this entire sector to America. I think this is going to be possible. Again, we can see this from the actions of companies like Honda, the way they've responded and the moves they've made in the past couple of days. That's why I think there will be a significant risk of unemployment in Ontario. The banks, of course, are paying attention to this. Now, when we apply for a mortgage, they pay very close attention to where a person works. If previously the field related to mechanical engineering was considered very reliable, now it's the opposite. The same goes for industries connected to steel and aluminum. Banks are now becoming more cautious. You should be prepared for the fact that if you used to get mortgages very easily, but your job is now in one of these at-risk sectors, it might turn out that you won't be able to get a mortgage. The next risk present in Canada is the risk that people who have mortgages are reaching the end of their contracts. We expect that the majority, about 60% of all mortgages up for renewal, will be in 2025, 2026, and 2027. The year 2026 will be the most active. A huge number of people who will be renewing in that same 2026, their interest rates will of course rise significantly because they took out mortgages at record low rates, 1.5%, 1.8%, and so on. I don't know what will happen in 2026. It's hard to predict, but if the interest rate hovers around 4%, then you could say it will be twice as expensive. Also, many clients took out variable rate mortgages where their payments didn't change. They'll definitely feel this impact strongly. Why? Because their mortgage principal hasn't decreased at all. That's why there's a big risk for people right now as well. On one hand, they could lose their jobs because of the economic situation. On the other hand, their monthly principal payments could go up because the mortgage has increased. And here, it's very important to make the right moves. Of course, if, for example, you have an all-in-one mortgage, you don't have to worry about anything at all, because even if you get laid off, you always have access to cheap money. Not everyone has an all-in-one. Many haven't even heard of it. I recommend watching my video on this topic. You'll understand why it's beneficial, because it's very advantageous to pay off your mortgage 2 or 3 times faster. And even in a situation where you're having financial problems, you always have access to cheap money. Because if you already have financial problems, believe me, if you go to the bank and ask them to give you a refinance, add more money, lower your monthly payment or something else, you're going to have problems because the bank won't want to work with you since they see that you represent a significant risk. If you have a holding bank, every dollar you pay off and you pay off your mortgage twice as fast as with traditional mortgages, that paid dollar becomes available to you as an approved limit. So for everyone with a holding bank, there's no need to worry. But for everyone with traditional mortgages, it might be a good idea to take some action. Before I give advice to certain categories of people about what to do in specific situations, I'd still like to say a few more words regarding real estate. Here in Canada, there is no single Canadian real estate market. It's all regional. You need to talk to realtors. But of course, there's a bit of a conflict of interest here. Why? Because there are situations that realtors wouldn't really want to talk about. For example, in Ontario right now, there are serious problems with sales of houses or condos. Houses are still doing okay, but where are they? In a catastrophic situation. Some people who bought a condo and maybe paid $700 per square foot and now the condo is being completed are having trouble taking possession of it. Why? Because that condo has become much cheaper. If they hire an appraiser and the appraiser says, okay, fine, you paid $700 per square foot, but now, because there are serious problems in the real estate market, that same condo would cost you, I'll just say roughly $350 per square foot. There are situations like this where it's half price. Most frustrating is it's nearly impossible to get out of these deals, because if you try to back out, you'll be sued and you'll have problems. If you're in a situation where you don't want to buy this home because it's now much cheaper, but backing out would be costly, I recommend contacting us so we can discuss your options. But there are markets in Canada that are still active. Even if we take the Calgary market or Winnipeg or Saskatchewan, there are regions that remain active. For example, in Winnipeg right now, there are still bidding wars where several buyers compete for a single house. But these are regional markets. If we look at all of Canada, of course, the situation is changing, especially when it comes to Ontario and BC. So here, I definitely recommend talking to your realtor and basing your decisions on that. But of course, there are regions that won't recover so quickly because, especially in the GTA, there are a lot of investors who bought homes there. All these investors aren't really interested in investing further. Why? because they bought under the assumption that everything would keep getting more expensive. And the second problem is that rent is becoming cheaper because we have far fewer immigrants. What advice would I give right now? Of course, there are different categories of people. There are people who are in a very good financial position, some who are in an average position, some who are in a bad position, and there are investors. So it's hard to give any one-size-fits-all advice here. So I'll just speak in general terms, and you can decide for yourself what applies to you. If your situation looks like you might lose your job, it's very important to take action now. And it wouldn't hurt maybe to lower your interest rate or even extend your amortization period. Why? Because you can always shorten it again later, but it will make it easier for you to get through this difficult time. If your mortgage is with banks like RBC, TD, or Scotia, of course it will be difficult to do this. You know, I deal with this every day. You warn people, explain that there are situations where you won't be able to change anything because it will be very expensive, the penalties are high. And people get tempted by some 0.1 or 0.2% difference, but then they call, we want to change something. You can't change anything. If you took out a mortgage with the banks, a closed rate for 5 years, that's it, you're stuck there. That's why I advise you to be careful. It's best to just call us. We'll make sure you get not only a good rate, but what's much more important, good terms. If you're in a situation where you might lose your job, it might be wise to take care of all this in advance. If you were planning to buy an apartment or a house and it looks like you might lose your job, I would actually prefer that you didn't do it. You can buy, of course. In fact, maybe now's a good time. You can get a good deal. But if you lose your job, you'll have trouble making those mortgage payments. So focus on your specific situation, your own circumstance. It's hard to give advice because I don't know what your job situation will be, but if everything is stable for you, then right now is actually a very good time to buy, yes. Because if prices are going down, that's a good opportunity. But if your situation is such that you might lose your job, that could be a really big problem for you. If your financial situation is solid and you don't have to worry about losing your job, then there's nothing to be afraid of. I believe there are some very good opportunities right now. You know, when problems like these happen, of course, you can cry, shout, or make a fuss. I'm unhappy with our government or with Trump or something else. Or you can just calmly look at the situation and maybe take advantage of it. So if your finances allow, it might not be a bad idea to buy another property if you have the opportunity. You know, let me give you an example. Just a couple of weeks ago, we had a real crash on the stock market when everything just collapsed. I have a couple of colleagues, especially one who seems like a pretty smart businessman. He has a lot of mortgage brokers and so on. And he writes to me saying that Trump has ruined the country, the stock market has completely crashed, bonds are down, that's it, the whole world is finished. You know, I told him this. I said, look, there are two categories of people. One is you, who is now complaining, and that's it. And then there's another category of people who ran to the bank, quickly got a certified check, deposited it into their investment account, and immediately bought stocks. And 24 hours later, they had already made 20% on it. You see? So, in any situation, there is danger. But there is also opportunity. It's always risk and opportunity. People often ask, Victor, when would you recommend investing? Maybe buying bonds or something else? I say, well, look, buying bonds might not be a bad idea, but it's risky. It could go up, it could go down. If you're far from retirement, why not? But then you need to invest in the right bonds, right? But if you only have a little time left until retirement, then of course it's a risky business. But when that crash happened, my hands were just itching, you know, and I really wanted to post on Facebook that to everyone who asked me, I recommend investing today. Not tomorrow, but today, because it was only a matter of time before everything started moving in the opposite direction. But I didn't expect it to happen 24 hours later, but it did happen. So everyone who reacted correctly made money on it, and everyone who panicked, shouted, made noise, of course, missed this opportunity. Cryptocurrency, on the one hand, it's profitable and many people invest in it, and it is strongly supported by our new government in America. That really means a lot. It can be quite an interesting business, but here we have to be extremely careful, honestly, because there are just so many scammers out there. You honestly can't even begin to imagine the conversation I had just last week with a person from Alberta. Inside, I was just overwhelmed with emotion. I felt so sorry for them, for how they were deceived. And I will record a video on this topic. I actually have a section called Stories from Life. This really will be a real-life story about this person. Of course, I won't mention this person's last name or address, but with this video, I just want to prevent this from happening because especially older people tend to fall into this trap. and I want to record this video and simply point out just how really quickly you can actually lose money and in what kind of situation that might happen. So keep following my videos. That way, you'll know exactly when and what you need to do. I can't guarantee that I'm always right, but judging by my track record, I can't say that I've been wrong very often. All the more so, I am cautious in my advice. With that, I want to end this video and wish you all a good mood, that everything goes well with your work, that you never lose your job, that you always make the right decisions when it comes to investments, and that none of you have any problems with your mortgages or paying them off. With that, I say goodbye to you. I wish you all the very best, good health and blessings. Until next time in the virtual world. This was Victor Schaefer.
Thank you for watching this video. We hope you found it useful. We would appreciate it if you shared it with your friends and acquaintances.
Follow us on Facebook at VS Financial Group and on YouTube at VS Solutions.
If you are interested in getting a mortgage or need insurance, fill out the form on our website vssolutions.ca.
Contact us by phone at 1-877-282-0904 or email us at saveavsolutions.ca.
Enjoy life today, cherish each and every moment, and rest assured we will create a successful tomorrow for you.